Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our review of the global economy with the key releases in the US, Europe, China, Japan, and India. U.S. market indices advanced amid heightened volatility and investors focused on a slew of positive economic data in the last 2 weeks. Retail sales report in December signaled resilient consumer spending, adding to the strong labor market conditions and weakening inflation level reported in the previous 2 weeks, providing another lift to the market indices. Existing home sales dropped to a 13-year low in December amid high home prices and elevated mortgage rates. European markets sold off after European Central Bank's policymakers pushed back aggressively against the market enthusiasm for rate cuts in the near future. Moreover, Germany, the largest economy in the Eurozone, reported GDP contracted in 2023, keeping the prospects of a recession alive. On a brighter note, passenger car registration in Europe declined 3% in December but rose 14% in 2023 as buyers returned and supply chain pressures waned. In Asia, China's economy expanded at a faster pace of 5.2% in 2023 from 3% in 2022, but slower than pre-pandemic levels. Japan's inflation eased in December, but core machinery orders dropped sharply in the month. India's wholesale price index inflation stayed slightly positive for the second month in a row, but wholesale prices remain in deflation in the 9-month period to December. India's trade deficit shrank to $5 billion in December from $7.8 billion a year ago, reflecting lower energy import costs. Let us review key events in global bond, currencies, and commodities market last week. The yield on the 10-year U.S. Treasury increased to a 1-month high of 4.12%, driven by strong economic data which lowered the possibility of an immediate rate cut in the near future. Gold traded around $2,025 and declined 1% in the week after Treasury yields advanced on strong economic data and policymakers tempered market enthusiasm about a near-term rate cut. WTI crude oil prices hovered near $73 after Middle East tensions stayed elevated and there was a prospect of a rebound in global demand. TTF natural gas prices in Europe decreased 11% to a 5-month low of 28 euros per megawatt hour, despite the recent cold snap and reflecting strong reserves. The euro hovered at $1.09 amid global general strength in the US dollar, and European Central Bank policymakers voiced that markets are prematurely pricing near-term rate cuts. The yen traded above $148 against the dollar and fell 5% as traders ramped up bets that the Bank of Japan is not likely to change its ultra-loose monetary policy stance in the near future. We now shift our attention to leading stock markets around the world. The S&P 500 index and Nasdaq Composite extended weekly gains after a slew of economic data suggested that the Federal Reserve is more likely to engineer a soft landing while lowering inflation to 2%. European markets declined after the European Central Bank policymakers pushed back aggressively against the near-term rate cut possibilities, and Germany, the largest economy in the region, reported weak economic data. The Nikkei 225 built upon the previous week's gains in Tokyo and hit a new 34-year high on hopes that the ultra-loose monetary policy is not likely to change in the near future. And the sharp decline in the yen supported the increase in earnings of tech and industrial exporters. China market indices extended losses for the third week in a row after the fourth quarter GDP fell short of market expectations and more property developers reported weakening financial conditions. India market indices struggled in choppy trading after foreign investors sold bank stocks following the weaker than expected quarterly earnings from the largest private bank HDFC Bank. Moreover, the investors turned cautious after Iranian missiles struck locations in Pakistan, raising the prospect of a wider war in the Middle East. We now review the latest merger deals and quarterly earnings updates. Hugo Boss, the German fashion group, reported lower than expected fourth quarter operating earnings in its preliminary results. Tesla, the electric vehicle maker, lowered the price of its Model Y in Germany and offered enhanced discounts for certain models in China. Charles Schwab, the financial service provider, said revenue in the fourth quarter declined 19% and net income fell 47% from a year ago. U.S. Bancorp, the regional bank, said quarterly revenue and earnings declined 7% and total loans and deposits rose 7% from a year ago. Taiwan Semiconductor jumped after the company reported flat quarterly revenue, but earnings declined 19%, and the company indicated solid growth in semiconductor demand in the current quarter driven by AI-related chips. Discover Financial dropped 10% after the credit card company reported a higher net charge-offs in its latest quarterly results. Restaurant Brands agreed to acquire Carrols Restaurant Group, the largest franchisee of Burger King, for $1 billion in cash. Goldman Sachs reported better than expected quarterly earnings on the back of strong performance in its asset management group. Morgan Stanley reported stronger than expected quarterly results powered by strength in its investment banking unit. Looking ahead to the next week, economic news and corporate earnings are expected to keep investors busy. In the U.S., economists are looking ahead to the release of preliminary fourth quarter GDP growth rate, PCE price indices, new home sales, and durable goods orders. On the earnings front, American Express, IBM, Intel, Netflix, Visa, Johnson & Johnson, General Electric, 3M, and Intuitive Surgical are on tap. In Europe, the ECB is expected to leave rates unchanged, and Norway and Turkey are scheduled to release their rate decisions. In Asia, the People's Bank of China is expected to leave its 1-year and 5-year rates unchanged, and the Bank of Japan is expected to hold its key interest rates and retain its yield curve policy intact. South Korea is scheduled to release its fourth quarter GDP growth rate, and Malaysia is set to announce its policy rate decisions. You can review daily U.S. and global financial market news, earnings releases, latest SEC filings, stock movers, and economic updates on ticker.com and 123jump.com. You can also get the latest financial books on Redera.com and keep up with financial industry events on eventsinamerica.com. That is all for today, and we will see you